Three, two, one.
Welcome into the open where we get technical. You should have investments in long-term growth. Hello, happy Wednesday. We are halfway through the trading week, and welcome to Get Technical. I'm Neil Hamilton. Here with me, as always, is Producer AB. Producer AB, I want to know, how are you doing today?
I'm well. I'm doing well.
Good. I like how you say I'm doing well. That makes you sound like you have a better grasp on English than I do.
I had a teacher growing up that if you said you're doing good, she would say, Superman does good, you're doing well. So
that's funny. That's awesome. All right. Are you going to be ready to hit that opening bell with the rocket ships?
yes, sir. It's here right about. Oh.
3, 2, 1, 0.
I got a copyright infringement notice from the band Rat, one of my favorite bands, for using their music in the background. All right. What do you want? All right. If you find me some royalty-free music, find it. I'll play it. There you go. Send it to me at Neil's Tweets. That's where you find my tweets on Twitter. Neil's Tweets. At me with the music you want in the background. All right. Sheesh. All right. Hard to please you guys. Today I want to talk about how to trade and how to invest in stocks from a beginner perspective. That's just how I'm going to open today's show. We'll spend just a couple minutes on it because I think it's a fairly simple concept. And there's actually kind of a twist. I recently saw a tweet. I think it was from Sven Ehrlich, if I'm saying that correctly, asking what is the best asset class for new traders and investors to get into. I think that there's some credence to the idea of getting into cryptocurrency first. I definitely think that you should paper trade. Paper trading means using fake money on a virtual account. You can do that on a lot of brokerages, and there's some websites that let you do that. You can do that with stocks, virtually trade them. Definitely do that. But the cool thing about cryptocurrency is you can do it whenever you have time. It doesn't close, and you can focus purely on technicals. You don't have to worry about other things like earning events and stuff like that. So that allows you to focus on one aspect of trading or investing. And then you can start to learn more about company fundamentals, earnings, corporate events, and outside events that affect the price of stocks. So that's one way to look at it. But let's just stick to stocks. Stick to a name that you know. Pick something that you understand. For a lot of people, for me, when I first started trading, that was Apple. Which the ticker for that is AAPL or Alpha Alpha Papa Lima, as you might hear some old school traders say it. Sticking to a stock that you know is fantastic because that means that you're already going to have an easier time understanding what's going on in the news. You're going to have an easier time anticipating events that are coming up because you're watching it. If you like a company like Apple, that means you probably know when the next developer keynote is or when the next keynote is, when product releases are. You're probably already reading rumors. You're already actively doing due diligence on the company. So I'd recommend sticking with something like that. The next thing that you can do very easily, I'm just going to give you one simple trick just to look at your stocks and see if you can find key levels. I'm not going to go too far in depth, but I'm going to tell you three things. Number one, trend. You want to find stocks that are in a trend. Now, what is a trend? Let me get my paintbrush tool out for you. A trend is one of the three directions that a stock can be moving in. It can either be going up, it can be going sideways, or it can be going down. So make sure you always understand what general longer term trend your stock is in. With Apple, we can see it's an upward trend over a long period of time. And actually, you can see I've drawn a line here for part of the trend here to give me an idea. Don't look too much into where my lines are or anything like that, but just note that this is an upward trend. Also note that we started to go downward. We started to go a little bit downward. We established a short-term downward trend. We started trading sideways, and we started trading upward. Those are very short-term trends that can exist within a longer one. But at any rate, trend is very important. The next thing you need to understand is the concept of support and resistance. Resistance is as high as the stock market's letting your stock go before it says no and knocks it back down. So you can see resistance right here. Apple stock tried to hit this level, got knocked back down. Support is as low as the market's willing to let your stock go before it bounces back up or sort of kind of stays there. And you can see some support right here. So remember that short-term downward trend we talked about? It was going like this, but then support said, we're going to keep it up. Okay? So those are three concepts that every trader needs to know. Trend, three types, up, sideways, and down. 2, support, and resistance. Always keep those in mind. A lot of the traders that are watching me right now live that think they know everything often forget these concepts and sticking to the fundamentals and get really fancy with tools that they pay a lot of money for, probably, and end up getting whipsawed and wonder why. So these are things that will carry you all through the market. So those are my tips for you for getting in as a beginner into trading stocks. Stick to names that you know, learn about trends and how to find them and identify them. Know that first, and then identify your support and resistance levels. Those are the levels where you're likely to get a reversal. So without getting too complex, I think that's a pretty good beginner lesson for getting into stocks. But try out some cryptocurrencies. The same tactical analysis principles of trend, support, and resistance apply there. How'd I do, guys? Is that a good lesson? Joe M is dropping an adage that all beginning traders need to know. The trend is your friend. Remember to trade stocks and trends. I'm going to show you one that doesn't have a clear trend. This stock, this one I'm not too familiar with. I believe it's pancake. And the trend is mostly downward here. So what you would be looking for is some sort of break out of that trend to get bullish on it. All right. So let's take thanks, guys. So those of you that are watching this video for the first time on the YouTube recording, I hope that was helpful. You can tune into the show every morning at 9:30 a.m. We always take a beginner perspective on stuff because that's just how I am. And I think that all traders benefit from sticking to the fundamentals, which, as you get into this, you'll probably know that that word has two meanings. All right. I also want to show you guys a little trick. Let's take a look at some stocks. Let's look at some stocks. I want to look at SPY. All right. SPY had a pullback, guys. Who got stopped out of some stocks yesterday? Who had their stop losses trigger? There is no time frame that is the best, Marcial. There is no time frame that is the best. It depends on your trading style. What I do as a swing or position trader, meaning that I enter trades and hold for a few days, sometimes even a month, and I'm adding in as I go, or I'm getting out a little bit, depending on what's going on. I'm looking mostly at daily increments, so daily candles, but I'll look at as long a time frame as possible to get an idea of what's going on with the overall price structure of the stock. And then I'll zoom in to usually get about 3-4 months on the chart at a time. Yeah, I had trailing stop losses on a couple of my actually like 4 got triggered yesterday. I'm good. Now we're looking for pullbacks. All right, so let's start off with SPY. We'll go to QQQ, then we'll go to some tickers that were mentioned in on Twitter, the Twitter tickers. And then I have another one that looks like a little bit of a rat snack that I'd like to give you guys. All right, so just looking at the SPY, pullback city. Guess what? No surprise. Shouldn't be a surprise. Always be watching your RSI on your major indices, or your ETFs that reflect them, and your sector ETFs, which we can get to in a moment. SPY always pulls back at about 70. All right, always pulls back at about 70. It doesn't necessarily need to get super overbought before it pulls back. Look at this thing. It broke up to 75. That's unusual for SPY. We always get big old whipsaws when that happens. But look at this one. It's not too bad. It's not too bad. So just bear in mind, RSI matters, guys. Don't count out the old school stuff. I know I make fun of you guys for being boomers, and I know that you guys all wear the bifocals that you pick up at CVS in the checkout. But that's okay. It makes it easier to see your charts. So let's take a look at this from two perspectives. Number one, I'm going to use the Fibonacci moving averages. What time frame is best to answer that? What time for, or where am I? Lost my train of thought. I'm going to use the Fibonacci moving averages. This is 8 exponential moving averages, 8 EMA, 21 EMA, and 55 EMA. We can see that we broke down past the 21. Not great, but we've still got a long ways to go before we're getting down to the next moving averages. The next thing that I'm going to do is go ahead and draw up my Fibonacci retracement. Starting from the swing high, going to the swing low back on March 25th. Trying to hit that wick exactly. And I'm going to extend my Fibonacci lines out further. And look at this. Although we have broken down past the 8 exponential moving average, we are still above the next line of support. I have to draw this up just a little bit. Let's get that exact. This is a daily chart looking at SPY, S&P 500. We are looking good for a bounce. We're looking good for a bounce. So today's session, we don't know. What we want to see is this level getting held. That's about $410. We are looking high and tight, which means really, really good if we hold this level. But we were so overbought that please don't be distressed if we go a bit lower and maybe even hit this 21-day moving average or go down to the next level. Yes, it will look bloody. Yes, people will be tweeting all types of requiems and freaking out about, how the market's broken and all kind of that stuff. But look, we got really overbought. So this is what happens. We take a breather, but we're looking high and tight today. So I would look for today's session. I'm not sure if I would look to that as much of a bounce, but if we see a solid green candle following this, I'm going to target the previous high on SPY. And it's not too dissimilar. Let's look at QQQ. Requiems. I don't even know if I use that word right. The movie Requiem for a Dream. I always thought that was a cool movie title, and I just throw that word in sometimes in business meetings. I'm like, the data looks good, but have you considered the requiems? And everyone's like, no, Neil, what do you have to say about that? And then that's kind of how I take over meetings. If anyone knows the definition, drop it in chat. All right, so we've got our same moving averages here. I'm going to delete some lines so we can clean it up. QQQ, as you know, some of you that are new to this that don't know, QQQ is SPY's wild younger brother. It's more volatile because it's more heavily weighted toward growth stocks, which are principally tech stocks, which just have wider moves in the market. So it's no surprise that its pullback is to a higher magnitude or to a higher degree than what we saw with SPY. So putting that in context, it too crossed down past its 8 exponential moving average. It is closer to its 21 exponential moving average. And I'm just starting to get used to these moving averages. These are based on Fibonacci numbers, but I really like them so far. So this is me. You're hearing me sort of adapt to a new trading style, which I'll consistently do on the show for your guys' benefit while I lose money because I'm kind of rusty. So at any rate, not rusty, but new. At any rate, we've got our moving averages here. We can see we've got a curl down on our 8, but we still haven't hit our 55 or our 21 rather. Let's go ahead and just remove those from the board. and pull up our Fibonacci levels. And we'll start at the swing high, go down to the swing low at the beginning of this initial impulse, and draw this out. Let's draw it out. And you can see that we're broken down past the 78 line. Yes, that means there's potential we can go down a bit further. I can draw Fibonacci lines on a shorter time frame and probably get more exact lines of support and resistance, but this is broadly speaking. This is very generally broadly speaking. The fact that this is holding right at this line tells me that it might continue to hold there, and it could be, again, a reversal, but I don't know. Let's see how our lines line up with that. Yeah, so it looks like you might get a little bit of a slowdown before we get to 68. Or 618, rather. Requiem is tangential to synergy. That is very true. And the margins are just incredible. Good margins, good margins. But look, I mean, this thing looks like the body is holding pretty tight today on the 78 line here. I would not be surprised, just because this kind of happens, if the body looks kind of like this. You know, you get your wick going up and the body kind of stops. Like it's the cat hanging on thing. Hang in there. We shall see. We shall see. There's plenty of room for this thing to bleed. So as pattern and technical traders, we watch and wait for confirmation. We don't do things on expectation. Being pointed out by Miles that we have this previous gap here, which I'll draw, which may serve as support. So that's a gap at about 332, where the stock closed the day, or not the stock, the ETF, QQQ, closed the day right here, and then opened the following day right here, creating a gap between sessions. Often a support, often a key levels there. All right, so let's get into some tickers from chat. I wanted to look at NVIDIA, NVDA. Let's see what it's doing in the open. Ooh, nice, Joe. Bet you're liking seeing this. Are you long on it? NVIDIA daily. Very, very nice. So I've got some lines here. Let me delete this. This line I drew a long time ago. And you can see that when we're doing our any type of flag or any type of breakout pattern, you want to see the breakout occur between the 50 and 75% mark. So about 2/3-ish in is when you want to see it. And this is when we're getting our big swings in volatility. We may have had our breakout and may just be retesting our breakout level here. All right. So let me draw the, get rid of those. That's one way to look at it is this pattern, which is an ascending triangle with a price target of the measured move added to the breakout level, which is very clearly defined, which would give us to about 720. About 720 on that. But let's look at it a couple other ways. Number one, first and foremost, what's happening now, we're just about on that Fibonacci moving average of the 8 EMA. We're just about on it. All right. We have not necessarily lost it. We're on it. We're riding it like a train on a train track. All right. We haven't totally crossed below it. Another way to look at this, I'm going to delete this flag because I feel good about having my price target set up here like this. So that's our sort of ascending triangle price target. Let's get rid of that. Get rid of that. Now let's look at the more recent pattern. More recent pattern is a reversal. Right? So let's get our paintbrush out. You guys already know. All right. Let's remove these moving averages to clean it up. Nice and clean. Let's draw our line from the high point of the pivot down into our little short-term downtrend, and then anchor the midpoint of that line so that it's touching the tip of the W here, right? Crossing this line was a buy signal. Which, Joe, I wonder if you did that. Joe, let me know in chat if you're here, if you did that. This is coming from Joe's tweet over here on the right. This was a buy signal, all right? And then your price target from that level was just about 538. Why was it 538? Because that is the measured, or I'm sorry, let me box this in. Because that is the neckline of your reversal here. All right. You can call this like a double bottom, or you can call this an ascending triangle reversal. See how it makes a nice little triangle? Getting up to that point of resistance would have been your immediate target. Then crossing that would have been your secondary target, which for me means pile in a bit. And then you do your measured move, which is added to your neckline, which gets you right here, which is just about at that support level. Isn't that cool? Really cool. And I just drew that really quick, so I bet you it's, if I were to be more accurate, like to the tick, it might be a little bit closer. But I'll remove that right now. So we're looking at NVIDIA. Number one, just remember that initial line that I drew, which is this. That was the breakout that I saw coming. This is the one that I have been watching for a while. Yes, we got a little bit messy, but it's still obeying. Now, let's delete all of these lines and get Fibonacci with it. Fibonacci. Let's go to our swing high, down to our swing low, draw this out. You can see that the 78 line is right now serving as resistance on the day. On the day. You can also see that the 618 line is exactly where I was drawing the resistance line on my triangle. Remember that triangle? So these are the levels to watch. We're watching 588. We're watching 613. My humble opinion is that NVIDIA looks pretty good. It got overbought, so you are, of course, seeing some exhaustion. It entered into the beating the rest of the S&P players for a while. Now it's just about in sync with the rest of the S&P. If we see some above average volume, which we're not getting today, it might not be today. We might get some consolidation that's between these two levels. We're going to trade probably between the 78 and the 618 line. But if we get some above average volume and we break above 612, you're going to target this previous all-time high. All right. And then a break from there. Sheesh. Sheesh, sheesh, sheesh. So my initial price target for my triangle is about 720. And then Fib is saying go a little bit higher. So we want to see a breakout once again past this line. And then we've got another speed bump ahead at 647. That's how I'm looking at NVIDIA. Okay. Wait, text? Do you want me to put text in there? All right, so let's look at WOOF. What's Petco? So did you guys know that statistically, tickers that sound like what the company actually does over time advance at a greater rate than tickers that don't? That's not one of my made up statistics. That's true. So if Palantir's ticker was like spy on you and sell your personal data to the government, it would perform better. Okay, so we're looking at WOOF. I like WOOF. I like it. So the red line that I looked at this morning for you, Tata. Tata, I looked at this for you this morning. The red line that I've drawn here is just, I'm looking at a daily, the entire price history of the stock's existence with its IPO on Jan 14, 2021, this year. The red line that I've drawn here, excuse me, is the point of control on the volume profile. Looks like I kind of messed it up. Because it's probably the point of control may have changed because of today's price action as we get into the day. I'm not sure. But anyways, I'm going to redraw that. So This is just the point of control, meaning this is where the most buyers and sellers, the price level where the buyers and sellers get most active. There's the most volume of trading going on at that level, buying and selling. All right, so now I'm going to remove my volume profile. And I'm going to turn this line bright red because that to me means point of control. I'm going to make it thick so you guys can see it too because you got your CVS bifocals. So the next thing that I'm going to point out is this looks like a nice little reversal on the way. When you go to the previous swing high, we go to the all-time high. Go ahead and anchor this on the middle point of this little lopsided booty. Buy signal. We had a buy signal as it crossed that line on about April 15th, April 16th. And what would have been your price target? Good question. Let's go ahead and do that. Let's give it a go. Let's use the previous swing high, previous swing low. Actually, yeah, let's give it a try. No. Let's use pure patterns. Let's use pure patterns. Let's draw a line at the neckline here. Just using patterns to come up with your price target. We're going to box in our pattern. Drawing our neckline about here. Although I think I might want to bring that lower. I think the meat of the trading is about here. And then let's go from the lowest level of support up to, well, first off, let me back up. If you use this as a buy signal, your price target should have been about $23.96 or $24. Why? Because that's where the meat of the trading was happening here. So that's the neckline of our pattern. All right. But now that we've broken out of that, this is a breakout. We're in breakout mode. Number one is we're going to hit a speed bump around 26 because that's a point of control, meaning that's just like hitting traffic. There's traffic ahead. But if we get through that traffic, it's a nice price target. I mean, lines up almost perfectly with the high on the second day of trading for the stock. So that's the measured move of the low on March 5th up to our neckline, added to the neckline. Lines up just about perfectly with the high of the second day of trading of the stock. So that's really how I would treat this. We can pull in some moving averages, but it's so young, it's tough, but they're exponential, so it still works. So check this out. I'm going to delete every single thing on my chart. The price target is about $30, $31. I think 30 is the way to do it. I would sell before that. Deleting all my drawings. And then we can see that this thing is pretty nicely riding this 8 EMA. 8 EMA. It's getting right above it. So what you're going to watch for is getting overbought, and then watch for resistance at that point of control, which again is at right about $26. Watch for that point of control. Woof. And guys, our lesson today is very special. It's not exactly a lesson. We're actually going to be voyeurs, and we're gonna spy in on an awesome trading chat room with David Green. If you guys recall, David Green from the boot camp also has been a guest on the show. One of the best traders in the freaking world. We're gonna all be a fly on the wall and check out what's going on in his trading room. So make sure you guys all say hi, David, in the chat, and get ready to trade along with him. But I've got 3 minutes left, so I'll hit another stock. That was Wolf. Thank you for the pick, Tata. So I'm going to look at Truff. Took a little look at this one. Yikes, damn, today's open got freaking rejected. All right. Deleting everything off the chart, everything off the chart, pure price action. You can already see there's an important level of support. Let's go ahead and get that drawn in there. Not bright red, though, because I'll think that it was the volume profile, so I'll get my color coordination right. A thin white line. Now I want to look at the point of control. Since it's such a young stock, it's very easy to find. And I will now mark this in the sand with a line, horizontal line, which I will now make bright red and thick. So that, to me, it means this is the point of control for the stock. This is where the traffic jam is. Next, I will draw my Fibonacci lines. I will go to the previous swing high, which is about 55 cents, 56 cents. And then I will go down to this current line of support, which it may behoove me to, I'm going to go down to the previous low, which is yesterday's wick. I'm going to get rid of this little line that I made. Boom. So we can look and see that the Fibonacci line is pretty much agreeing with our point of control. Remember that red line I drew? So that's the 23 on Fibonacci. This is an area where congestion lies ahead. So a lot of times it's not exact lines. It's not to the tick, but rather it's an area of trading where resistance lies ahead. So what I'm looking for on TRUF, and before I tell you that, let me first draw my my line here from the absolute swing high, anchoring it to this high, down. One is I want to break out of the downward trend. I have not broken out of the trend until we get a swing high that looks something like this. Second thing is, if we get a solid bounce on this level here at 17 cents, 17 and a half, you can start targeting the next level up on your fib line, which is about 26 cents. But know that that is a congestion area and that's a sell area. Get the heck out if you get a fast move up there. But then, if you get a little bit of a consolidation phase, you can target that next level up. Right? That's how it works. Why is Apple sucking this week? Maybe because I was complaining about Apple a lot on Twitter today. Their new products suck. But you know what? They too, just like QQQ, they're having a little bit of a pullback, and it's actually green today. So the question is, are we going to buy it? Let's pull out our fib levels for Apple really quick, and then we'll go on to spy on David Green's room for free. So actually, let's do this a little more justice than this. I'm going to use this previous high here where we're consolidating, and then go to this level. This is our previous low, and you can see that we're respecting the 78 line here. We hit it, we touched it, we played some games with it. Now the body's much higher. I think, judging by this activity, and the fact that this is some prior resistance. So if I draw a line here, you can see it going back in time. Damn, it's a red line. That's going to confuse me. You can see that that served as sort of the top level for this consolidative phase. I'm going to make this line white just so it fits my trading style. I would be looking for a little consolidative phase and a bull flag for a continuation pattern, a continuation bull flag of some sort. It might break these levels. We don't know. But that's what I'm looking for as a bull in Apple, which I am. Even I'm pissed about their products. I wanted them to be better. That's just how it be. But just based on the stock's like recent performance, the fact that it did break above average volume fairly recently, some folks are participating in Apple. So this is a flag. Then we would be looking for a break above before we do anything. Yeah. Okay. So, guys, it is now my great esteemed pleasure. Apple ain't going nowhere in the upcoming years. We shall see. We shall see. I don't like to bet against companies that have such brand power and such like huge coffers for research and development. Who knows? I think I don't think their current management is very inspired in terms of new product development, but rather product optimization. So I would like to see a management turnover, which Tim Cook has said may come soon. I forgot what the exact details were on that. But yeah. All right, guys. Time to be spies, creepy little spies. We're going to spy on David Green, see what he's got going on. So let's get him on the show.
Hello, hello, hello.
Hello, hello, Mr. Green. How are you doing today?
What is going on? How are you, my friend? Just going to get my screen up.
I'm doing great, man. I can't wait to see what you got going on today.
All right. Thank you for having me. I appreciate it.
Always.
So let me know when you have the screen up and everybody can see what we're doing over there.
We got it.
We see Futu right now?
Yes, sir.
All right. So we're watching Futu right now. They announced a secondary yesterday, and if we can see what the stock did yesterday, it was a total freaking disaster. The stock went from 178 down to 130 yesterday. We're watching it right now. We're trying to get a little short off on the 5-minute chart. So we have a little resistance now up at 132.77. So you see I have a little order up there to short it. We'd like it to go up there as fast as possible, but that's what we're looking at right now. Couple of great setups we had already this morning. We have, I want to show you Myrna, which was a beautiful trade that we had this morning, and it's still continuing actually. So everybody who has joined me knows that everything we do is all about technical analysis. We use 4 different moving averages, and we have pivot points and a relative strength index that we use. So if we look at Myrna, it just ripped right out of the gate today, all the way up to $163. And when it pulled back, and this was a very early trade for us at 9:45, we bought the stock at 158.30. It made a low of 158.10. The reason we bought it was because we thought it would hold this trend line and then just trend for the rest of the day. So we bought the stock right here. A lot of people, because it was so early in the morning, took a quick $1 or $1.50 out of it. But what we're taught with the technical analysis I use is to always hold a little bit of this trade when a stock is very strong and hits a trend line. And some people are still long the stock from that 158 range, and we're back up to like the 160, 130. And what we'll do with something like this now, for people who are still in it, you just raise your stop and start trailing it. And you trail your stop up to lock in profits, and hopefully it just continues to trend for the rest of the day. So that was a trade we had very, very early this morning. Coin was on our list this morning.
Yeah,
and it always is. And it always is. This thing in the morning happened way too fast. We spiked down all the way to 302. But we had a bid out. Technically, we had a pivot point down at 298. Would have just been a spectacular trade, but we didn't quite get there. But the trade that a lot of people in the room took was when we rallied up the first time to our trend line. And we rallied up to $313.90. And look what happened, guys. Let me make this bigger for you. Look what happened.
When you do that, David, could you also explain how you use pivot points and what you were looking for there?
Yes. Okay. So these aren't even pivot points. These are our regular moving averages.
Yep.
So we use our 9 EMA and our 15 EMA when stocks are in trends, right? Let me go back to Myrna so everybody can see this very clearly. Okay. So Myrna clearly establishes an uptrend very early, right? So when the stock pulls back to our 9 and our 15 EMA, that is telling us that it's hitting the uptrend, and the odds are, and everything we do is based on odds, right? And using our technical analysis, the odds are that it's going to hold those trend lines and continue going up for the rest of the day. So if we go back to coin now, okay, the first time it went up and hit our 9 and our 15 EMA, this is kind of in a downtrend now. So when stocks go up and hit our 9 and 15 EMA, we want to short them. So when stocks are strong and they pull back, we want to buy. And when stocks are weak and go up, we want to short. And this is a trade that we got in at like 313.90, something like that. And 5 minutes later, the stock went down almost $3. And everything we do is a trade, right, Neil? So I'm not looking to stay in stocks and make $10 or $15, $20. We're traders. And if we can pick up a buck or two on a trade, look, I have people in my room that are just beginning to trade, and they'll trade 10 shares of stock or 20 shares of stock because they're learning. They're just starting out. But I have people in my room that trade 3,000 to 5,000 shares every time we do a trade, and they have millions of dollars in buying power. So, if you can pick off $1 or something on a 3,000 share trade, and you do that twice a day, you're doing okay. It's $1.5 million a year. But you got to walk before you can crawl. But we are not about, nor have I ever been about, hitting a home run, ever. Day trading is difficult enough to do. And what some people think that they're going to do a trade and they're going to make $9 on a trade, right? It's not going to happen. We look to make little bits of money that add up to bigger amounts of money at the end of the day, the end of the week, the end of the month, and the end of the year. So let's look at Futu now. And, again, this didn't happen. But if it did, this would have been a beautiful short, right? This is our 65 EMA. So what we call this is a regular moving average trade. When a stock goes up far enough and hits one of our levels, it's telling us to short the stock. And the odds, again, let's talk about odds. The odds, if this stock would have went up there, about 90% in our favor that it's going to stop going up and start going down. If it didn't, quite simply, Neil, we put a stop order in above and we get out of the trade. And we have a stop order on every single trade that we do, no matter what. Coin, someone's pointing out in my room. Let's take a look. It started to go a little bit. You know, coin now, again, we're looking at coin now. This would be a tremendous short now if the stock could ever go up $6 from here and, again, hit our 65 EMA. That was beautiful. You know, I was on, we're becoming more regular with Benzinga, and anyone who was with me the last couple of weeks, we got short the entire market. I think it was last Monday. Not exactly sure what the day was, but it was here. We got short the entire market, and the way we did it was some people bought some puts in the Spider, some Spider puts. Some people bought the SQQQ because the NASDAQ had done the same exact thing as this. And all we were looking for on this short was a pullback to one of the trend lines, right? So the Spiders made a high of 418, and it went down to, it actually went to 410.50, but 412 is the level that it's at right now. And that's the trade that we did. So we took 6 points out of this trade, overextended, you know, by every measure. I don't know if you agreed with that or not, Neil, but we just got way ahead of ourselves. You know, we were up like 13 out of 14 days.
What told you that was the day, though? Because it was it was way overbought, and there were a lot of signs of it being overextended, exhausted, whatever. What told you that was the day?
Well, this is RSI, which we never see in the SPY, right? You know the SPYs. SPY to get to a 75 RSI on a daily chart, it doesn't happen very often.
I said that this morning.
Yeah, it just doesn't happen very often. And that's telling you that it's very, very overextended, and we can expect a little pullback. We're not talking about crash. We're not talking about anything else. We're talking about a trade, right? And it got overextended. Really, where I wanted to get out of the whole thing, and we got out of it, and we made a couple of bananas on it, whatever it was, when we saw that it was holding this level. If that's the extent of the little down move that were happening, this market's in great shape, right? If that's what it is, then this market's off to the races again. I was kind of hoping we got down to this 409.20. You know, we got to 410.50 today. You know, that would have been a spot to certainly clear out of everything. We would have made a couple more bananas on it. So again, something gets very overextended. We're just looking to make a couple of bucks. So we're not calling for a crash. We're not calling for anything like that. It's a trade, right? And look, we all have our long-term investments. Everybody knows that. We got them. Let them take care of themselves for anybody who's in this room, right? Anytime the market has ever gone down significantly, it's been for 150 years, it's been nothing but a buying opportunity. So that'll take care of itself. You know, day trading is a different animal. I can tell you guys, and I've had a bunch of people, Neil, come in from Benzinga, and a lot of them have decided to stay with us. And if you could hear some of the stories that these people, since they've been with us in the room for a couple of weeks, that it's just changed their whole day trading strategy and their outlook on it. And hold on one sec. Netflix and Facebook. Look at Netflix, what it just did here, guys and girls. Again, and this is choppy, but Netflix this morning, first of all, last night they had earnings. They were horrendous. Well, they weren't horrendous. They were what people perceived to be horrendous. That brings me to a good point, because when earnings come out in the stock, it does not matter what the numbers are, okay? For us, for a trader, right? The only thing that matters is price action. That's all that matters. I don't care if the numbers were good, bad, or indifferent. We were actually watching this last night. I want to show you how close this thing came to being an absolutely spectacular trade, right? And this was higher last night. I'm looking at a weekly chart now, guys and gals, okay? A weekly chart. And this actually last night was like 478. And it changed a little bit because the stock has changed. After hours last night, I'll show you guys, this stock made a low of 480. 480. It missed our level by like a couple of dollars on a weekly chart. Now, this morning we looked at it, and first thing in the morning, I said to all my traders this morning, and again, we watched this level like 3 times. So this is a trade that you can do, and a bunch of my people in the room grabbed this early in the morning. Tested 505, tested 505, tested 505, right? So what happens, Neil, when you keep knocking on a screen door? Right? Eventually, it's going to get so weak that you're going to break through it. So this is what we call a momentum trade. And a bunch of people in the room grabbed it before the market opened at 505. And look what happened when it got up to our resistance level on this pivot point. So the difference between a pivot point and a moving average, quite simply, is pivot points are going to be more stretched out. So they're going to be further away from where the stock is trading, and it actually gives you even a better entry. So that's a difference between a pivot point and a moving average. If you look at all my moving averages, they're all kind of close together, right? They're near each other. But the pivot point, you can see how stretched out this was this morning. And it basically almost got to 515, and then it's just been a bloody mess since then. So to break out above 505, the little short about 515, and now it's kind of just sitting. I wouldn't do anything in Netflix right now. It's hit this moving average 3 times, right? Mm-hmm. So let's look at what our next entry could be if it breaks down from here. So we had a pre-market low this morning of 498. I would probably get involved in that. But we're looking at a 5-minute chart now, right? On my 5-minute chart, my next real support is $467. That ain't happening. We're not going to $467. So now we have to change time frames to see if we have something in between. And again, this is all technical analysis, guys. The beauty about technical analysis and finding something that works for you is my charts tell me where I'm making trades. So I'm going to a 30-minute, I'm going to a 1 hour, I'm going to a 4 hour, and there's nothing here. There's not going to be because the earnings came out. So, I mean, here we go. 502.84 is our 200 EMA on the daily chart. Now, do we have that on a 5-minute chart? Absolutely not. So if we went down to the 503 level, I think 503 would be a spot where we can buy a little Netflix. Did you guys buy Labu? What happened in Labu, guys?
We were not. I have not looked at Labu.
Yeah, it's one of the stocks that we really like. Sag, where did you get everybody in Labu? I mean, here, this stock established an uptrend pretty early in the morning, right? So again, look what happened when the stock pulled back and hit our 9 and our 15 EMA. It didn't even get to the 9.
Wait, are we looking at a triple leverage thing?
Yes.
Okay.
Labu is
just for clarity.
Yes, we love trading Labu. When this stock goes, okay, it goes. And usually it's in one direction. But if you can find that direction, it's a beautiful stock to trade. I'll show you guys this on a look at this. This is the 5-minute chart now. So this almost got to a shorty right here at 68.80, right? But now this is set up for a nice uptrend. So if we get a pullback to the trend lines, we want to get long, thinking that this will continue the uptrend and bounce from there. Sal, where'd you get everybody in? When it broke out above 66, what are you laughing at, Neil?
I just love it, man. I want to join your room.
Yeah, Sally, one of the guys in my room pointed this out at $66 when it got above this trend line the first time. And, now we hope that it pulls back to a trend line so we get long the stock. Nice job. How many people in the room got the Labu with Sally? That is beautiful. I'll tell you, Neil, the best thing about our room is that, D-Dog. Yeah, D-Dog would have been a nice short up at 86.30. Now it's kind of sitting in the middle of everything. So when I put up a chart like this, and everybody else in my room knows, and it's sitting right in the middle of everything, the odds are horrible of making a trade right here. We would just never do it. If it pulls back to the trend line, we can get long. If it goes up to resistance, we can get short. But a lot of traders who don't know what's going on, I mean, there's probably a 50-50 chance that this stock goes up and down from here. However, if it goes up and hits one of our resistance levels, there's probably an 80% chance it's going down. And if it goes down and hits one of our support levels, there's probably an 80% chance that it's going up, right? So that's what day trading is all about. It's all about putting the odds in your favor. Boeing. Boeing almost just got to the short and went down $1, right? Crazy. Didn't quite get there. No, I do not use small EMAs. Look, there's not much difference between an exponential EMA and a small EMA. It's a couple of pennies when you're looking at levels.
Hey, I want to ask you a question that I don't think it's dumb. I know the answer to it. I'm just asking for someone else that they're new. Is when you see pivot points, when you set those on your chart, are those areas where you look for the price to go in the opposite direction when it hits
Correct.
it?
Yep, that's exactly right. Yeah. And
I knew that.
The further a stock moves to hit one of those levels, the better the trade will be.
Okay.
So we're looking at coin right now, right? I mean, it's trading at 312. I would guarantee you, I'm not guaranteeing anything, it's trading, okay? But there's about a 99% chance if this stock was to spike down 14 points for some reason, that it's going to stop going down and start going up.
Okay.
And the same thing on the upside. You know, our pivot point now is $10 away from where the stock is trading. So the way we make all our trades, Neil, and what everybody should be looking for out there is we need movement before we get into a trade. If a stock is just going sideways, there's no edge, right? There's just no edge. It could go up, it could go down. But, you know, it's like being at a casino. You're going to lose in any game that you play at a casino because the odds are against you, right?
Yep.
No matter what you do, the odds are against you. But by using the technical analysis, and really even more importantly, by using the proper money management skills, which is very important in a casino if you're a professional gambler or everything, right? That's more important. We could pick the spots to buy and sell stocks, and there's probably a lot of people out there that can.
Mm-hmm.
What to do once you get into the trade is a whole nother ballgame, right? It's not turning a winning trade into a losing trade. It's not turning a winning day into a losing day. It's getting out of your losers very quickly, right? And as traders, we have a tendency to do the exact opposite, especially the uneducated, which there's a lot of out there, especially since this whole pandemic started. And we have TikTok and we have Reddit and we have all this other nonsense out there. And we've had, well, the bottom line, Neil, is a lot of traders started right after the pandemic. They don't.
You're
know
not
what
on
it is
TikTok, David?
Yes.
I was looking for your profile the other day.
I'll tell you why I go on TikTok.
All right.
Okay? Because I invite people to come into my room for free and hang out with me a week and give them as much education as I can during that week. My room is free 3 weeks out of the month. And then I have a boot camp that I do once a month, which we charge people to be in because it's 40 hours of live instruction that we do. We do my entire course live. But I'm trying to give the uneducated and the beginning traders at least a shot, right? Do you know how many accounts got wiped out? I mean, recently.
I want to see the stats on that.
Buying plug power, and I'm not picking on any individual stock, but let's go to daily and weekly charts on these things, okay? Look at this thing, all right? This is all you saw on TikTok and Reddit. And by the way, I am long plug power now for the first time since it made a high of $75. I'm not giving advice to anybody, okay? I'm not telling anybody what to buy or what to sell. I'll tell you the reason why I am is because we are now sitting on a weekly support level, okay? Doesn't mean it can't break it. Doesn't mean it can't go further down from here. My next support is 12. But I think the odds are if we get a halfway decent market or they just decide to start buying these things again, we could get a decent bounce off of here. I mean, it's been cut by 2/3. So that's the reason we got into that stock a little bit. But some of the other ones that, you know, people talk about every day. Here's CCIV, right? How many accounts are gone? Because everyone in Joe Mama was telling them to buy CCIV at $65 or $64. And the list just goes on and on. I could look at all of them. Now, Palantir, which is another favorite of everybody. Kathy Wood. If you guys don't know, Kathy Wood is the owner of ARK Investor. She is a tremendous.
They know, and if you mention Palantir and if you're not a vehement bull, they're going to show up at your house.
That's right.
Well, careful what you say.
Right. But do you know how underwater some people are in this stock? I mean, the stock ran up to $45. At that point, it was going to 100, right? I mean, and now it's been cut in half. I'm looking at it technically. I like the long-term story in this stock. Well, my entry is $18, and I'm not doing anything until it gets there. Or if it starts showing strength above our little resistance levels here, that's the way to play this stock now. If it pulls back to 18, okay, you can start a little. I like buying stocks on strength, not on weakness, right? When something shows me that it's going to start to do a little something, that's when you get involved in a stock. Or, Neil, if it really gets overdone and gets down to one of our longer-term trend lines, that's another place. But I want to buy stocks that are showing me they're going to go higher.
Yes.
Right? Unless they get down to a level that makes sense for us to buy.
Listen to this man, please, guys. It's like I feel like it's when like a group of kids get like a hold of a lighter for the first time.
Yeah.
You know, it's like you're gonna yes, it lights up when you hit the button and you can do all kinds of crazy stuff with it. But listen to someone that's been lighting a few cigarettes for a while. All right.
Yeah,
I don't know if that totally makes sense, but people are waiting for crazy stuff to happen with Palantir. but wait for it to get in a freaking trend.
Yeah. I mean, here's the gig. You keep flicking that cigarette lighter, it's going to burn your finger eventually. It gets hot, right?
Yep.
It's like we know when we're boiling water, the stove is hot, but we still got to put our hand on there to check it. Always.
Yep.
So, yeah, show me some strength, all right? It would be a beautiful thing if this could get above this little level right here, like $26. To me, that's what it's got to get above. It made that high 2 days ago, right? So here's what we did in this stock. We bought it. I'll tell you what we did, because we even trade swing trades or whatever it is. We bought it on the weekly level at 25.30, wherever it was. No, I'm not talking about Palantir. I'm talking about the other one. I'll show you in a minute. But anyway, if you're a Palantir player, okay, show me some strength. At least get above, 25. But this is the real breakout, $26. That's what it's got to get above. And then everybody can jump on in and probably make a couple of bucks, because we got nothing but air above that.
All right, I gotta placate someone in chat.
Yes.
This is for you, Solar. I'm looking at you. Do you have any particular settings for your pivot points, or is that the standard study that comes with? I think.
Yeah, I'll show you exactly. Everyone in my room uses Thinkorswim for charting. We're all looking at the same thing. It doesn't cost anything to get Thinkorswim for charting. All you got to do is go through the process of opening up an account with them. You don't have to fund it. I've had these charts for 15 years. I've never had a penny in there. So everyone who's in my room, we do this because we're looking at the same things.
Mm-hmm.
I'll show you this. My setting looks like, right? And this way you can just copy it.
Screen cap this, Solar. Get
Yeah,
your
here
screen
you go.
cap.
So this is what my pivot point actual setting looks like. So show only today, no time frame day. One very important thing. I have 3 support and 3 resistance levels on mine. Okay.
Yeah.
Make sure they're all checked. Show plot, show bubble, show title. All the way across. So give it a screenshot. Make sure you're all checked. And that's my settings for pivot points.
Not too crazy. Pretty close to the standard settings.
Yeah. The one thing we do a little different than everybody else maybe is relative strength. I have mine set on 80-20. A lot of people use 70-30. I want things to be a little more stretched out when I get involved in them. So that's why we use that. But I want to show you even the swing trade that we got into in Plug, how we traded it. Okay. So yesterday, and we bought it on the weekly. I'll show you guys. Okay. So we bought it on a weekly. Our price was $25.30. Okay. Yesterday, the stock got up to $26.30. So we had $1 profit in the stock. So everybody in the room, I told guys, take some profits when we make $1 in the stock. So we sold some at $26.30. So we made $1. That brings our cost basis now down to $24.30. So we actually gained an extra $1 on our cost basis because we sold some up higher. So even when I'm doing a swing trade, okay, and swing trades, we hope to work out in 2-3 days. Sometimes we'll hold them for a week as long as they're in our favor. That's fine. But sometimes we do a swing trade because something's moved so far and it works the same day, and I'll take my profit. Again, I'm not liking to look 15, 20 points on a trade. I'll take my little profits when they get them. Speaking of Labu, let me show you Labu. Okay, because this was a trade that we did make 20 points on, and some people made 30 points. And it was just insane. Okay, this is a weekly chart of Labu. And the stock had gone from $185. Hit our 200 EMA on the weekly chart at 71.
Oh, shit.
Right here at 71. I was watching this stock day after day after day, and I said, not yet, not yet. Dave, we got to buy Labu. It's down from $185. No, we don't have to do anything. It went 67 cents below this spot and went up $30 in the next 2 days. $30. So when you see something that's got cut more in half and hits a big giant support level, there's about a 99.9999999% chance that trade is going to work. And quite frankly, if it didn't work, we just would have got out of the trade. If it broke down below that significantly, we're out. It's not holding that level. And it's just been a bloody mess since then, right? I mean, look, it actually set up for a trend trade short when it got back up to like 109, and it's been garbage ever since then. Playboy 3850. Let's look.
We're just about at time here, David.
All right, that's fine. Let me do this for everybody here, okay? Next week is my boot camp, so I don't have any visitors in the room. That's when I do my entire course live. But anyone who wants to bop in for today, tomorrow, and Friday, be my guest, greenroom-live.com. You're more than welcome to come in and hang out for the next 3 days. And That's it. I can answer any questions anybody has if they actually come into the room, and I'm sure I'll be back next Monday. We do every Monday at 2:00. I'll even be doing that while we're doing our boot camp. Let me leave everybody with one thing, Neil. Okay, it's all about money management, patience, and discipline. Find the right technical analysis that works for you. Find somebody, if you're serious about doing this, that's going to sit with you all day and walk you through every single thing that we're doing. And I thank you guys for the time once again.
Thank you very much, David. You've been fantastic. You have a great trading day.
Thank you so much.
All right, David Green, everyone, get your butt over to that trading room and check it out for free. Come on. The boot camp sounds awesome. I'm going to probably go there. So we'll be, what do you guys think about using some pivot points going forward? I would love to try it out. You know me, always trying to experiment with what our educators are using and seeing if it is something that I understand and hopefully is helpful to you guys. Make sure you smash that like if you learned something today, or if you just got, you felt like you had some company or were otherwise entertained. At any rate, let's do a little share screen so I can get my audio on here. Happy Wednesday, everyone. We are in a state of pullback in the market. I don't think it's time to crap your pants. I think it's time to pull them up. Keep them clean. We're grown-ups. Yes, I'm a little bit red in my portfolio, but that's because my trailing stop losses got hit. It's an opportunity to take a good look at some stocks. Thank you so much for joining us. Your time is very, very valuable. I know that, so it means a lot that you joined us today on Get Technical. Again, check out greenroom-live.com for more from David Green. You can also catch him on Benzinga on our YouTube stream. He's going to be a regular. So thanks, guys. I'm Neil Hamilton. This has been Get Technical. Happy trading.